In today's video, we're going to be looking at the Pi cycle top indicator and also, perhaps most importantly, a crucial resistance area here on the Pi cycle, because if you look to the past, we've always seen some sort of rejection and resistance at this green moving average. So let's dive into today's video and analyze this in a bit more detail. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy data science, Bitcoin content, and let's dive right into it. So the green moving average, that's just one of the moving averages when we look at the Pi cycle top indicator. The orange moving average is the dynamic support that is going to be facilitating this uptrend, and any dips into this level is going to be a very good opportunity to add and dollar cost average to a position. But the green moving average, that is the 350-day moving average multiplied by 2. This tends to be a key resistance area, at least on the very first attempt at reaching that level, and that moving average represents the price point of 66k. So at the moment we are at 61k for Bitcoin right now, but this moving average is just ahead. And when we look at the past, for instance, even to as far as 2012, we see overextension beyond there and a rejection ultimately. So if we just zoom here, overextension and rejection here, getting us closer to the orange moving average each time. So this green moving average on the very first time of asking, that's where we tend to reject. But then later we break beyond there and enter a parabolic rally. In the next cycle after that, or at least after the mid-cycle, you can see rejection from here, but ultimately we give way and enter that parabolic rally. So that's essentially one cycle, a mid-cycle, and then the second part of that cycle. So that's one bull market. But if we look to the 2015 cycle, for instance, we break out from this accumulation range and we rally to this green moving average right over here. This is where we see a rejection and a pullback back into the orange moving average where we find support. So these are two dynamic moving averages, the orange one that can act as a support, and the green one on the first time of asking at least is where we tend to reject. And then after holding support here, we reject for a second time and maybe even a third time before finally breaking beyond here, turning into a support and then rallying towards the upside. And you can see that this green moving average actually still acts as a support later on in the cycle. 2019, you can see that overextension and upside deviation beyond this moving average happened, and then a rejection from here in a picture perfect manner. So we get the upside deviation and then we get the lower high from a picture perfect rejection here. Generally speaking, this is still that rejection zone, that green moving average. So by moving on later in the cycle, you can see that we break beyond this green moving average. Still some initial rejection, but then we ultimately break beyond there and rally to new all-time highs. So the point I'm making here, and the point that history is really suggesting to us, is that whenever we get to this green moving average, we tend to reject from there on the first time of asking at least. Because if we look to 2012, for instance, 2012, we see that we overextend beyond here, but we reject from here. So generally that first rejection on the first time of asking, and then the second time of asking, we break beyond here. On that mid-cycle, still some rejection, and then we break beyond. And here on the first time of asking, rejection, still two rejections later on, and then we break beyond there. So here we reject from here, pull back, here we reject, and hold a bit at the highs. That first attempt of trying, we then break beyond here. So the point I'm making is that we could reject from here based on history. On the first attempt, we tend to reject from here, whether it's a small rejection like this one, which forms a reaccumulation period, or whether it's a deeper rejection like we've seen in the past over here, or even over here in the 2017 cycle. And that's quite interesting because this rejection, that could get us closer to a pre-halving retrace, because historically we tend to see a pre-halving retrace around the halving event, and we're getting close to the halving event. We're around 45 days away from that event. So getting close to this Pi cycle moving average, where we tend to see rejections on the first attempt of asking, It's very interesting that that also means that maybe we don't get to new all-time highs before the halving event. Of course, if we're going to consider upside wicking beyond this point, then yes, maybe some upside wicking gets us beyond this point. But this is the major threat for Bitcoin at this point in the cycle to getting to new all-time highs before the halving event. And if we don't get to those new all-time highs, then this pi cycle moving average, that is the major threat that is going to prompt a pre-halving retrace going into the halving event, after which we'll then later recover. And once we revisit this level, maybe we'll get some sort of shallow rejection, but ultimately with time we will break beyond there, because that has always been the situation. Sometimes we reject from there. Sometimes we see deep rejections, in fact, from this moving average, as we've seen in the 2016-2017 cycle, but ultimately we always break beyond there. So if we think about this moving average right now, that's going to be the major stumbling block for Bitcoin at this point in the cycle. And if we do reject in there, then that pre-halving retrace will occur. And always, when it comes to these rejections, for instance here from the green moving average, that orange moving average is always one to watch out for. Rejections from the green one always get us close to the orange moving average. This has been the case, for example, right over here. In this case, we reject from here, get to the orange moving average. Here as well, we reject from this region and get to the orange moving average. And the thing here is that it might be a bit difficult to try and think about, first of all, thinking of a rejection, because Bitcoin has been on a tear lately. But if a rejection does occur from here, and maybe we form some reaccumulation range. If we do form a reaccumulation range, then maybe we'll break out from there and rally to those new all-time highs. But if we do see a deeper pullback from here, then with time, this orange moving average is going to continue to climb up. And as a result, as we continue to maybe pre-halving retrace, at some point we'll get closer to this ascending moving average, which will act as a dynamic support. So that's quite interesting to bear in mind, because at the moment, this green moving average is at around 66k. It is currently at 66k, and this orange moving average is at 43k. But who's to say, first of all, this orange moving average is going to continue climbing up, so maybe we get to 45k, maybe 46, 47k as we experience that pre-halving retrace. And also, this moving average, the green one, is also inclining. So at the moment it is 66k, but maybe it gets to 67, 68k, maybe 69. And that becomes the old all-time high rejection area, where we get that sort of, we don't break to new all-time highs, but break, or at least reject from the old all-time highs. So these two moving averages are going to continue to ascend, but this is the major resistance on this current uptrend, and it's the last major resistance before new all-time highs and price discovery. So if Bitcoin is able to break beyond there, then we're bullish beyond belief. We see new all-time highs before the halving event, but this is that last major resistance that could throw a spanner in the works and send Bitcoin into a pre-halving retrace, unless we see something of a reaccumulation range form develop below this green moving average. But nonetheless, even if we do get a deeper pre-halving retrace, the orange 111-day moving average is always going to be, first of all, ascending, but second of all, and perhaps most importantly, going to be a dynamic support that is going to facilitate the uptrend. So if we do get to this orange moving average, that's going to be a fantastic buy side opportunity for a dollar cost averaging. But do we get such a deep retrace on the pre-halving retrace? Maybe not. Maybe we won't get such a deep one. Maybe we'll get a 20% shallower retrace, something more conservative. But the closer we get to this orange moving average, that's going to be a simply better opportunity for a long-term holder, and also one of the final buy-side discounts in the pre-halving period on that pre-halving retrace. So it's all about these two moving averages, because later when we break beyond them, we're going to simply overextend, and those moving averages are only going to come into any use for us once we get to that bearish crossover to mark the bull market top. We're nowhere close We're nowhere close, because even if we were to propagate these two moving averages, we would have a bull market crossover later, very much later in the cycle. For the time being, these have utility in acting as dynamic resistances and supports. And so this resistance coming up next will be very interesting to see how Bitcoin reacts there. Subscribe to the channel for more videos like this in the future. Thank you so much for watching. Leave a like if you enjoyed this video and like data science content on Bitcoin. That's about it for today's video. Thank you so much for watching. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.